Burry is as infamous as an investor can get. He was a trader, a low-level investor who was beating the markets by so much and with such consistency that his close friends begged him to open up a fund and let them invest. In 2000, he finally broke, and he founded Scion Capital right at the start of the dot-com bubble. It would have been easy for him to follow the crowd, to get swallowed up by the hype and buy into the dot-com companies which were just about to boom, but he didn't. He stuck to his value investing principles, and at the end of his first full year of investing, he had returned his investors 55%, while the S&P 500 had lost 12%. He went on to continue to run the fund, beating the S&P with consistency that most people can't even dream of achieving. In 2002, the S&P fell 22%, yet Burry was up 16%. In 2003, when the S&P rebounded and returned 28%, Burry beat that as well, giving his investors a return of 50%. By the end of 2004, he was managing $600 million and was turning investors away. We all know what happened next. He identified and successfully bet against the housing and mortgage market bubble that started in 2006 and solidified his place in history. Despite what was practically a revolt amongst his investors, he held off the margin calls and returned almost $1 billion to his investors by the end of 2008. Over the 8 years that his fund was active, he returned 489% compared to the S&P's 3%. When people say that Burry was only right once or he's living off his past successes, all that says to me is they don't know what they're talking about. And it's his history, his track record of beating the indices and investors alike that makes it impossible for people like me to ignore what he's saying. We have to listen to what he's saying. We have to give his arguments due consideration, or we risk being like those investing in pets.com in 2000 or buying a home 0% down in 2006. Whether or not you agree with him, whether or not you like him, listening to Burry, considering his arguments on their merit, is essential to being a successful investor, and that's what we're here to do today. But really quickly, if you're new here, subscribe to the channel. We're putting out loads of videos just like this constantly that you don't want to miss out on. In February of this year, Burry went on a tweet storm laying out his position regarding the economy, inflation, interest rates, and the market. Now, while that may not seem like something to take particular note of, Burry has since been forced off Twitter and he rarely speaks out about anything anymore. So something as innocuous as a tweet storm is pretty much all we have to go off if we want to see what Burry is thinking, and that makes them maybe the most valuable tweets in the world. In the description down below, there's a link to a Twitter account which archives Burry's tweets because they have now all been deleted. But I'm also going to show you what was said in the most important ones. The US Gov is inviting inflation with its MMT-tinged policies. Trillions more stimulus and reopening to boost demand as employee and supply chain costs skyrocket. This basic tweet right here pretty much encapsulates Burry's thoughts. The United States is increasingly entering into the realm of modern monetary theory, where basic principles like increasing the money supply causes inflation don't exist. The idea is that by spending or just dropping money out from a helicopter like we saw with stimulus checks would boost the economy, and as long as there isn't full employment, it won't cause inflation. This ridiculous idea has been pushed along by people who don't want the magic money printer to end, and they point to seemingly just as ridiculous examples in the past as evidence that they are right. People who support MMT often point to the quantitative easing that took place following 2008 and the fact that no inflation occurred there, but they are failing to do the most basic bits of due diligence and check where the money went. It's really quite simple, to be honest. In 2008, the money printing went straight into assets, into financial instruments and securities. It never reached the people on the ground, it never reached their wages or their consumables, and that's why it didn't cause inflation. But stimulus checks, helicopter money, is the polar opposite, and they have already caused inflation. Inflation in the US right now is higher than it's been for 20 years, and everyone who believes in MMT has just decided to ignore that fact. There's a very good chance that the CPI data that will be released in just 3 days will show us a 7% year-on-year inflation rate. But Burry puts it far better than I ever could. Direct payments cause inflation. It's that simple. Wages are being forced up. Goods are being forced up, and services as well, but the MMT cultists just make the argument that it isn't hyperinflation, so it isn't really a problem. Or it's just supply side shocks, or worst of all, it's just transitory. So what are Burry's arguments against the naysayers? Well, it's basically historical precedent. It's Weimar Germany and it's the similarities to today. The life of the inflation in its ripening stage was a paradox which had its own unmistakable characteristics. Many great fortunes sprang up overnight. The cities had an aimless wanton youth. Prices in Germany were steady, and both business and the stock market were booming. The exchange rate of the mark against the dollar and other currencies actually rose for a time, and the mark was momentarily the strongest currency in the world on inflation's eve. Almost any kind of business could make money. Business failures and bankruptcies became few. The boom suspended the normal processes of natural selection by which the non-essential and ineffective otherwise would have been culled out. Speculation alone, while adding nothing to Germany's wealth, became one of its largest activities. The fever to join in turning a quick mark infected nearly all classes. Everyone from elevator operator up was playing the market. If this sounds all a little bit familiar to you, then good, because it should. In Germany, on the verge of economic collapse, the mark was the strongest currency in the world. Right now, people are fawning over the dollar and its apparent inability to fall in value, and they're using the dollar's strength to justify their belief that the market is fine. In Germany, businesses were not allowed to fail. Companies who were inefficient, poorly run, and in bad states were propped up with loans that seemed too good to be true. And in America today, interest rates are so low that practically any company can finance growth for pennies on the dollar. And finally, speculation practically became a national pastime. Now, as someone who believes in crypto and DeFi, it pains me to say this, but almost the entire crypto market is just pure, unbridled speculation. And the same can be said for growth stocks, NFTs, and Pokemon cards. The similarities between the US today and Weimar Germany are far stronger than most people seem to realize. And yet still, people make the claim that this time it's different. All the marks that existed in the world in the summer of 1922 were not enough by November of 1923 to buy a single newspaper or tram ticket. Throughout these years, the structure was quietly building itself up for the blow. Germany's inflation cycle ran not for a year, but for 9 years, representing 8 years of gestation and only 1 year of collapse. Well, I hate to be the one to say it, but this time it is not different. It never is. Bubbles always rise, and when they do, those who have made their wealth from them make every argument under the sun for why they will not pop, but they always pop. Now, to clarify my position, I do think inflation is a far bigger threat than most people realize, and I am positioning myself to make profits throughout a strong inflationary period. But I don't think hyperinflation is around the corner, and to be honest, I don't think Burry thinks it is either. For hyperinflation to take place, we would have to see inflation of 20% a year while the Fed still ignores it, and I just don't think that they are that irresponsible. When it gets to that point, the Fed will taper, and they will do so quickly. They're not stupid, they're just a little negligent. Burry did also give us some insight into how one might position themselves for an inflationary period, but there's nothing there that will really surprise you. Real estate, commodities, gold, platinum, and collectibles all make the list, but Burry does clarify that when hyperinflation leads to economic collapse, as seen in Zimbabwe, owning certain things like real estate didn't protect anyone, and in fact, it often made them a target. As for me, I'm still mostly invested in the markets. I mostly own real estate and stocks with a healthy little allocation to some crypto as well. And while I do believe that most asset classes are in a bubble, more often than not, time in the market beats timing the market. If you're new to the channel and you enjoyed this video, then make sure to subscribe. If you want to help spread the word, then consider liking the video and leaving a comment, and YouTube will do its part by pushing this video out to more people just like you. I really do appreciate all the support you give the channel, even if it's just leaving a like. If you want to help out further, there is a link down below in the description to BlockFi where you can get up to $250 in free Bitcoin, and you can earn interest on whatever crypto you hold. Whether it's Bitcoin, Ether, or even stable coins, you can earn as much as 14% interest a year. There's also a link to my favorite brokerage called eToro where you can trade stocks, shares, crypto, commodities, foreign currencies, and more, all for 0% commission, so make sure to check that out as well. For those of you who haven't seen, a couple of days ago I got an email from YouTube threatening to delete my channel. I'm still not 100% sure what's going on, and so just in case the channel does get deleted, make sure to subscribe to my backup account, Stoic Finance 2, and follow me on Twitter. I'll put links to both of those in the comments. I am also working on setting up my own website where my videos will be posted in the future, and I'm going to be setting up a Patreon as well. In general, I'm just trying to diversify because even if this does all work out and my channel isn't deleted, this really has given me a kick and reminded me that it's just too risky to only have one channel, especially when YouTube randomly deletes channels much larger than my one, like Matt Kors. I don't want to have to censor myself at all. I want to keep making the videos that you guys want to watch and expanding this brand onto other platforms to make sure that I'm not at the mercy of YouTube. Thanks for all the support recently. Thanks for watching. Until next time.